Hi, I'm CJ Holmes, real estate investment broker in the San Francisco Bay Area. I've developed a national foreclosure rescue plan that will keep owners in their homes, get the banks lending again, and require no new bailout monies. We're at a foreclosure bailout crossroads where how we deal with our problem will dramatically affect our future and our nation. To help you understand the seriousness of the situation we're facing, I need to explain three things. 1. How the real estate market really works. 2. How foreclosures are affecting our market. And 3. How we can work together to fix our problem the best way. Let's start with how the real estate market really works. I've drawn three simple pictures called the pricing teeter-totter, our equity fountain, and the real estate engine. This pricing teeter-totter demonstrates the effect of supply and demand on home prices. It shows how easy money inflated real estate prices and what we're facing now with foreclosures and tight money. The key formula to grasp is this foreclosure imbalance. For every foreclosure, the buyer pool loses another buyer and the market gains another home to sell. This pushes the market further and further out of balance. In fact, I'll show you in a minute why I say supply-demand is broken. This equity fountain shows how our markets interact with each other. The banks, with their cash reserves pump, push the money and credit throughout our various equity pools. The banks sold loans to Wall Street and got cash back. This easy money fueled our home equity growth, which we spent on our businesses, which fueled the growth in our commercial real estate, which flowed back into the banks, allowing them to generate more credit. When this debt turned sour, Wall Street disappeared as a money source, and the government stepped in with some cash reserves to keep the pumps working. This sour debt has now turned into millions of home foreclosures, which are dragging down the values of every home in our country. If our market had enough buyers, this loss would be temporary. But because supply-demand is broken, this valve is wide open and our equity is pouring out of our market. You can't blame the banks for being concerned their new loans will turn bad as the market continues to fall. Buying up a bunch of foreclosures may sound workable until you realize with supply-demand broken, no way to stop our losses, we'll just be throwing trillions of good debt after bad, losing even more. The only way to stop our losses is to fix our supply-demand. Buying our way out will only run the risk of inflation, waste our money, and play favorites by allowing some third party to make profits on our real estate with our money. My foreclosure rescue plan will stabilize the home market, which will stabilize our businesses, which will stabilize our commercial market, which will stabilize our banks, and allow the economy to begin functioning correctly again. Here's my research of 11 Bay Area counties showing how devastating foreclosures are to our market. You need to understand two things. There are not enough buyers to stabilize the market, and most of the sales are dead-end sales, which I'll explain in a minute. The most sales these 11 counties ever had was 97,000. Right now we're tracking at 66,000 sales per year, just 2/3 of peak volume. Here's the problem. Each month we have far more new listings than sales. Monthly we're averaging 5,500 sales, but getting 8,100 new listings. Bank-owned property is about 25% of the market, but with short sales, bank sellers account for 57% of the market. We're flooded with inventory far beyond our capacity to buy. That chart is where we are. This chart shows where we're headed. Here's our foreclosure shadow inventory connected to our sales volumes. By adding the notices of default, foreclosure auction sales, and bank-owned property, then subtracting those already listed for sale, we see we have 63,000 properties coming to the market in the next 3 to 6 months, over 132% of our 48,000 housing unit market for these 11 counties. What will we do with double the inventory we have now? And note, this inventory jumped 12,000 just last month in April. We're right about here in this graph from Credit Suisse that shows potential foreclosures through 2012. This coming avalanche is why we can't buy our way out of our market meltdown. The real estate engine that fuels the market are first-time home buyers and investors. In a normal market, the seller of a home moves up, fueling the growth of real estate equity. Now, when a bank sells a home, market action is over. With 57% of the market having bank sellers, most of our deals do not fuel equity growth. Our higher-priced properties are starving for buyers, and now money is extra tight for larger loans. Combine that with a drop in property values, and most of these current owners won't be able to refi out of their option arms. So month by month, the upper end collapses into short sales and foreclosures, draining the equity out of our real estate pool. So how do we fix our broken supply-demand? The best solution has several requirements. It must keep owners in their homes. It must be simple enough to do on a mass scale all at once. It must be fair to everyone, everywhere. It must give the banks freedom to lend without fear of more losses. And it must not involve any new debt, which could hurt our currency. Here's the answer you've been waiting for. We restructure the debt we already have. Here's what our plan looks like for homeowners. Owners get to keep their homes. All homes purchased or refinanced between 2004 and 2007 will get a new price pegged at income value or market value, whichever is higher. That new price will be a new 5% interest 30-year fixed loan for the owner. The difference in the debt will be a silent lien against the property, written off by the banks over the next 10 years. Now here's what the plan looks like for banks. Banks are going to get full credit for the entire debt against the property for the rest of this year. Write-offs will start next year with a formula designed to let market recovery help reduce actual losses. Banks will stop having to pay out millions to foreclose, own, and sell property they never wanted in the first place. Look at what will happen when our plan is implemented. Bank-owned and short-sale homes will disappear from the market, which should quickly lead to stabilization. Banks will be eager to make loans rather than owning homes. Bank losses will be known, which will remove the fear of unknown losses in the marketplace and should help stabilize Wall Street. No new debt was created, so there's very little inflation risk. This solution is of the people, by the people, and for the people. I'm asking you, the people, to help make this happen for your property. United we stand, divided we'll fall. Please go to my website, print the debt restructuring request form, and fax it to your lenders. Email your representatives and favorite news media, and let them know this solution is what you want for your home and to rescue your property. Follow me on Twitter, CJ Holmes, FRP. Write on my Facebook wall. And thank you very much for your consideration.